Tesla just hit 7 straight quarters of falling sales in California. What's going on? Tesla's electric vehicle registrations in California have dropped again, this time by 21.1% in Q2 2025, with just 41,138 cars registered, down from 52,119 last year. Financially, Tesla's Q1 revenue slipped 9% to $19.3 billion, with profits crashing 71%. Political distractions, regulatory fights, and cheaper competitors are squeezing Tesla hard. Yet the Model 3 and Y still lead in California as Tesla bets big on energy, AI, and robo-taxis to find its way back. If this breakdown is helpful to you, remember to subscribe for more concise, easy-to-read updates. Tesla is facing a tough stretch in 2025. Year-to-date, its stock is down 18.3%, while traditional automakers like Honda, Ford, and Chevy are gaining ground. The hybrid vehicle market is booming with a 54% surge, leaving Tesla behind as consumer preferences shift. Globally, Tesla's vehicle deliveries fell by 13.5% last quarter. Adding to the pressure, Tesla managed to register just 3,622 Cybertrucks in the first half of the year, a disappointing figure given the hype surrounding its launch. Despite this, the Model Y and Model 3 remain bright spots, continuing to lead as the top-selling vehicles in California's zero-emission and hybrid segment through mid-year. While Tesla's numbers are going down, its competitors are moving up. In California, Honda's registrations are up 9.9%. Toyota's up 8.5%, Ford's up 10.5%, and Chevrolet has jumped 21%. Hybrids are having a moment too, with registrations up 54% in the first half of 2025, now making up 19.2% of the market. It's not just in California. Tesla's losing ground globally as well, with rivals picking up speed. BYD, for example, just passed Tesla in Europe, delivering 7,231 battery electric vehicles in April 2025, just above Tesla's 7,165. In May, BYD sold 376,930 vehicles globally, including 204,369 battery electric vehicles, powered by its lineup of affordable electric vehicles that are resonating with buyers. Over in Europe, Volkswagen has become the top-selling EV brand. Tesla's European sales dropped 49% year-over-year in April to 2025, while the overall EV market in the region grew over 25%, with Volkswagen taking advantage thanks to its broad lineup and strong brand loyalty. NIO is pushing hard in the premium EV space, especially with its battery-swapping tech. In May, NIO, Li Auto, and XPeng delivered 97,612 vehicles combined, which is nearly 50% higher than last year. These numbers are telling a clear story. Tesla's facing more competition than ever as other automakers roll out new EVs and grab market share. Now, let's talk about Tesla's financials, which didn't help the situation either. Tesla reported its Q1 2025 earnings back on April 22nd, showing big drops in revenue and net income compared to last year. While the company's energy and AI businesses are growing, its core automotive business is feeling the heat. Revenue for the quarter came in at $19.3 billion, down 9% year-over-year from $21.3 billion. Net income took a steep dive to $409 million, down 71% from $1.39 billion in Q1 2024. The revenue drop mainly came from fewer vehicle deliveries and lower average selling prices, all while facing heavier competition and production changes. It's a rough patch for Tesla as it deals with these pressures in the global EV market. In the first quarter of 2025, Tesla delivered 336,681 vehicles, marking a 13% drop year-over-year, while producing 362,615 vehicles. This delivery decline is Tesla's weakest quarterly performance in almost 3 years, tied to production adjustments and growing market competition. Even with its sales slipping, the Tesla Model 3 is still holding strong in California. It's one of the top-selling cars in the state, grabbing a 12.6% market share, just a touch ahead of the Toyota Camry at 12.2%, with the Honda Civic following close at 11.5%. California isn't letting go of its love for zero-emission vehicles either, with nearly 1 in 5 cars registered in the state being a ZEV. way above the national average of 7.8%. In just the first half of 2025, Tesla managed to register over 3,600 Cybertrucks across California, even though it dropped to 25th place among alternative powertrain vehicles. The Model Y and Model 3, though, are still sitting comfortably at the top when it comes to hybrids, ZEVs, and plug-in hybrids here in the state. And just this week, Tesla opened its new Hollywood Tesla Diner, a 24/7 drive-in spot with superchargers where you can grab a burger, fried chicken, or even a Shirley Temple while you charge up. Tesla is facing several problems that are causing a drop in its sales. One big issue is that many of its cars are now older models, and people are starting to lose interest in them. At the same time, other electric car companies are bringing in fresh and attractive options, creating strong competition. On top of that, some customers are unhappy with Elon Musk's involvement in politics, especially his past connections with Donald Trump, even though they later had a public falling out. Earlier this year, Tesla had to stop work at some of its factories due to updates on the Model Y. This caused delays and hurt their first quarter performance. Globally, Tesla's car deliveries fell by 13% in the second quarter, and experts think this year might be the second year in a row with a sales drop. This is happening as the electric vehicle market gets tougher, with high interest rates and changes in what buyers want. In California, Tesla's car registrations have been falling for 7 straight quarters. This decline seems to match the time when Elon Musk became more involved in politics. His launch of the America Party and public fights with Trump have made many people think he's too distracted from running Tesla. Investors are worried too. Another challenge is the federal tax credit of $7,500 for new electric vehicles. It was removed during Trump's time and is now expected to end completely on September 30th, 2025. Without this discount, fewer people may want to buy EVs. At the same time, more people in California are choosing hybrid cars over fully electric ones. The share of zero-emission vehicle registrations in the state has dropped from 53.4% to 45.3% in just 1 year. Meanwhile, companies like Chevrolet have seen their electric car sales jump by over 80%. Tesla has also faced protests due to Musk's past connection with Trump and a group called the Department of Government Efficiency, although he has now ended those ties. In response to declining sales, particularly a 7-quarter slump in California, where year-to-date vehicle registrations are down 18.3%, Tesla is shifting focus to improving its brand and customer engagement strategy. One recent move includes the launch of Tesla's first retro-style diner in Los Angeles along historic Route 66, which combines dining with EV charging and entertainment. Featuring 80 charging stations, movie screens, and Tesla's Optimus robots, the diner is part of CEO Elon Musk's broader vision to transform Tesla into a lifestyle ecosystem, not just a car company. With robo-taxi pilots in Austin under safety scrutiny and EV competition intensifying, Musk must now prioritize affordability, innovation, and operational discipline to recover sales momentum. The diner may help draw public attention and brand buzz, but the lasting impact will depend on Tesla's ability to deliver next-gen products and rebuild trust among skeptical investors and customers. Tesla's 7th straight quarterly sales decline in California is a clear sign that the EV landscape is shifting. Rivals are gaining ground, hybrids are surging, and political distractions aren't helping Tesla's case. Yet, despite falling numbers, the Model 3 and Model Y still lead in California, and Tesla's push into energy and AI shows the company isn't standing still. Whether Elon Musk's renewed focus can steer Tesla back on course remains to be seen, especially as competition tightens and regulatory uncertainties loom. For now, Tesla's California struggles mirror its global challenges, underscoring a pivotal moment for the company as it tries to balance innovation, pricing, and politics in a maturing EV market. If you found this breakdown helpful, hit like, subscribe for more sharp EV insights, and let us know in the comments if you think Tesla can bounce back.